the United States and China have just taken a key step toward easing one of the most intense economic tensions of the 21st century. After months of a trade war that shook global markets and sparked fears of a worldwide recession, both giants have agreed to a significant reduction in tariffs for a 90-day period. The agreement was sealed in Geneva after intense negotiations. The result: Washington will lower tariffs on Chinese goods from 145% to 30%, while Beijing will cut duties on American imports from 125% to 10%. This truce begins on May 14th, and though temporary, it sends a clear message. Neither side wants to break their economic bond. But this deal is about more than tariffs. The U.S. is using it as leverage to push China to crack down more forcefully on the illegal fentanyl trade. Washington is also demanding structural reforms, better protection for intellectual property, an end to forced technology transfers, and a halt to massive industrial subsidies. The message is clear: it's not enough to buy more American goods. China must change the way it does business. On China's side, the domestic impact is becoming harder to ignore. Idle factories, layoffs, and an economy struggling with a real estate bubble and rising youth unemployment. Beijing knows it needs stability to avoid worsening its internal situation. News of the deal had an immediate effect on the markets. Gains across Asian, European, and U.S. stock exchanges, oil prices surged, and gold, typically a safe haven in uncertain times, dropped. Investors took it as a breath of fresh air in a world full of economic anxiety. Still, fundamental differences remain. This pause is not the end of the trade war, just a break in the action. Talks will continue, led by Scott Bessent for the U.S. and Ha Lifeng for China. Their shared goal: to avoid a full economic decoupling between two rival nations whose economies are still deeply intertwined. If you enjoyed the video, give it a like and subscribe to our channel for more stories like this. See you next time.